Chapman. What's going on, brother?
Hi, Tom. How are you?
I'm doing great, man. Yourself?
Good, thank you.
How about this market, huh? Rejected lower price, right, man?
Yeah, we were down very sharply. All the indices were down, and the Dow's come back over 300 points. The S&P's come back over 30 points. So what I've been discussing for a little while, and certainly with my subscribers, is I've been saying we've got a rotational correction going on, and it's very selective. And my suspicion is until the market really gets used to the fact that you're going to have these particular sectors that like the kind of Robin Hood type stocks that suddenly scream to the upside, like a GameStop.
Yeah, Best Buy, AMC,
yeah, so
right.
That, in a sense, takes away money that would normally go to other areas. So the market's just kind of getting used to this, but we're going to have to face facts. This is going to be the normalization of the market over the coming months. So you can see in the chart I've got on the left side here is the Dow daily chart, and you can see the struggle. We've got these doji candles for the last 3-4 sessions, moving to the upside, but kind of struggling, and then a nice reversal today to the upside. So basically what we're looking at is very selective, and for my subscribers to my opening call, I'm trying to be as selective as possible. Got some under-the-radar stocks. We still have our stocks like a Bank of America, which we've had for some time, born in the 31s, is trading at the 43s right now, actually at a high, not an all-time high, but close to an all-time high, at a high right now at 43.25. So that speaks to the rotational aspect of the market. But at the same time, just going back to the Dow, you can see that the weekly chart has held very nicely, but it is under the all-time high of 35,091. If you look at the S&P, under the all-time high of 4238.04, got real close 3 days ago, running nicely, still 13 points lower today. But the attempt in the weekly charts is saying that the technicals of the weekly chart are still strong enough to say that there's residual strength and there's an attempt to get to new all-time highs. So I think that that's very important. At the same time, you've got certain stocks that are showing tendencies that I like to look at in terms of just the overall knowledge of what the market does. For instance, we bought a stock the other day, RBLX, Roblox, that is, a corporation does gaming platforms, game creation. And I said, if this thing can get to the 95 area, very often stocks that go to 95 very quickly go to 105. This is just my experience. It's not like I've done a statistical analysis. It's just kind of what my background experience is. So we read it. It went to the 93s, and 2 days yesterday it hit 103.92. So I'm trying to use some of the experience that we've got for the stocks that I like. For instance, this does gaming platform and game creation. Now, I don't know too much about it, but I do know that they are becoming quite an essential part of the whole platform for gaming. And I think that that's important. So as I say, it's kind of under the radar, kind of off the major screens. So I think that this is the kind of stock that we're looking at. We're looking at sectors that probably are not on everyone's focus. We've been along the DBA, pulled back today. But this is the DB Agricultural Fund. Anyone going to a grocery store lately knows that wheat and corn and soybean, everything's going up. So I suspect that in the longer term, even though it's got a short-term top in place, the DB Agricultural Fund will be going higher. The monthly chart is only in leg B. And talking about monthly charts, we just closed, let me just go to the S&P. We just closed May, we begun June, and look how close we are to extending this leg B in the monthly chart. And in the Chapman Wave, we're always looking for at least 4 higher peaks. That would take us to a leg D. So that looks out and says over the period of 2021, we should be looking at higher highs. Just being a little cautious and somewhat selective here, because even stocks that you think are doing well, there's some kind of surprise that comes out, and they can get really blasted very quickly. So I'm trying to be as selective as possible. We've got some cash on the sidelines. I kind of like the position we're in right now.
So Basil, what do you think about inflation, not inflation, just in general? Do you know what I mean?
Well, one of the things that I look at, and I've looked at for years, is it's not what you and I think of in terms of inflation. It's what does the Fed count? What do they look at? And I think that it might have changed over the last couple of months, but overall, they've been looking at the construct that they use doesn't really speak to the kind of inflation that most people in their day-to-day lives experience. I mean, just about everything, insurance, you can name it,
right?
Everything is higher. So to deny that there's inflation, to deny that there's at least 2 or 3% inflation is silly. It is.
The reason I'm asking is that, like, after this segment, I'm going to do a segment on housing, and I'm going to show you the folks how much this has gone up, and it's exponential. And you know, I don't agree. What I'm going to show you, I'll go through it. I'm not going to, and I'll show you the numbers that I agree with and don't agree with. But the bottom line is that in my lifetime, I've never seen when someone can get pricing power, I haven't seen them gone down. Do you know what I mean? It's like a car doesn't go to $30,000 and then all of a sudden 2 years later it's $25,000.
But think proportionally, when you got your first house and what you were earning.
Oh my God.
That differential. I don't care how they want to assess it. That has changed dramatically.
Well, the differential. My first house happened to be in South Boston. So my first house. Basil knows this number. It's sick. Is $14,000. Now it's $2 million.
And if you think of the earning power, people's wages, there is such a divergence between the number that you mentioned now and what people are earning to be able to afford the $2 million.
Yeah.
It's just that has to be considered. Really, that's inflation at its core, because most young people at some point consider getting a house.
There's no doubt.
That's really important, yeah. So, there's a thing called TIP. Tips. The TIP. I always thought that TIP measured inflation. It doesn't. It does something completely different. They talk about it as an inflationary vehicle, but I don't think it is.
And folks, it's very easy to get Basil's newsletter. Go to our website at TFNN. You're going to newsletters. You're going to see the opening call right on the left-hand side. Basil, thanks so much, man. Have a great one, safe one. We look forward to the show tomorrow.
Thank you very much, Tom.
Thank you. Stay right there, folks. Come right back.